XRP is currently trading at around $2.20, far from its all-time high of $3.30, and even further from what some analysts believe is its real potential value. But here's the catch. Multiple financial institutions are now launching XRP futures, and if XRP handles just 10% of Swift's daily transactions, some believe its price could skyrocket. Let's dive into the facts, explore what's happening behind the scenes, and take a closer look at whether XRP is truly undervalued, or if this is just market hype. Recently, Claver, managing director at Digital Ascension Group, DAG, made a bold statement. He said XRP is heavily undervalued, especially when viewed through the lens of derivatives trading. According to Claver, if XRP manages to grab a small share of the global derivatives market, even just 1%, its price could potentially reach $100. Now, that's a huge claim. So let's unpack why Claver and others believe this is even possible. First, there's been a major shift in 2025 regarding XRP's role in the derivatives market. In March, a significant milestone occurred when Binomial Exchange launched the first XRP futures product in the United States under the supervision of the Commodity Futures Trading Commission, CFTC. This product, called the XRP US Dollar Myra, XRUY, futures, offers a regulated and transparent way for investors to gain exposure to XRP through futures contracts. This alone is a big deal. But things didn't stop there. In April, Coinbase Derivatives entered the scene, listing its own XRP futures contracts, again under CFTC oversight. Coinbase introduced both standard contracts of 10,000 XRP and smaller, nano contracts of 500 XRP, making it easier for institutional and retail traders alike to get involved. And now, the biggest player is stepping in. On April 24th, CME Group, the world's largest and most respected derivatives marketplace, announced its plans to launch XRP futures on May 19th, pending regulatory approval. These contracts will include micro-sized lots of 2,500 XRP and larger contracts of 50,000 XRP. Let's pause for a moment. When CME, a company trusted by institutional investors across the globe, enters the XRP space, it signals more than just market interest. It suggests institutional acceptance, and possibly future inclusion in broader financial products like spot ETFs. This is already happening in a limited way. The Teucrium 2X Daily Long XRP ETF has shown that there is demand for XRP-based investment products. And with more regulated futures now available, a pathway could open for spot XRP ETFs, just like we've seen with Bitcoin and Ethereum. Now let's talk about Swift. Claver didn't just focus on derivatives. He also made an important comparison between XRP and the Swift network, which handles the majority of global cross-border payments. According to Claver, if XRP were to handle just 10% of Swift's daily flow, the price impact would be substantial. Why is that? Because Swift processes about $6.5 trillion every day, particularly in areas like post-trade processing, settlement, and foreign exchange. If XRP were to become a preferred settlement layer, even for a fraction of that volume, the demand for XRP would increase dramatically. This idea is not far-fetched when you consider XRP's design. The network is built for speed, low cost, and transparency. These are things the traditional banking system continues to struggle with. So, naturally, comparisons between XRP and Swift come up often. But let's remain realistic. Yes, XRP has strong fundamentals. It's backed by Ripple, a company with over 60 global regulatory licenses, including approval from Singapore's MAS, the Central Bank of Ireland, and the New York Department of Financial Services. Yes, it's gaining traction in derivatives markets, and more financial players are beginning to recognize its potential in payments and settlements. But as of now, the price doesn't reflect that. Despite all these developments, XRP still trades around $2.20. So the market seems cautious. Why? A few reasons. One is the regulatory uncertainty in the US, which still casts a shadow over XRP. Another is the broader crypto market slowdown, which tends to affect all assets, regardless of their individual progress. And lastly, real adoption, especially from banks and large institutions, takes time. So where does this leave us? Claver's comments about XRP being heavily undervalued are not without merit. The groundwork is being laid. Regulated futures are launching. Institutions are watching. And the technology continues to deliver real-world utility. Still, as investors or observers, We need to be careful not to let projections of $100 XRP distract from present realities. Price is driven by adoption, regulation, and market sentiment, not just hope. But if XRP manages to capture even a small piece of the derivatives market or Swift transaction volume, then yes, we could be looking at something much bigger than we see today. So the question now is, will XRP seize this opportunity, or will other players take the lead? Let me know your thoughts in the comments. Do you think XRP is undervalued right now? Or is this just speculation until the market proves otherwise?